This video is titled Code Red for a reason. The price of the S&P 500 has began its, I would say, the beginning of its collapse. We spoke about how the S&P would end up following the price of Bitcoin, and I didn't get the best of comments for bringing the picture that, okay, the price of Bitcoin topped in October of last year, and the S&P was going to therefore follow, similar to the lag that we experienced in the previous cycle. It's just the lag was a bit more extended this time. Well, it's happening now. When we overlay the price of Bitcoin, or in fact, yeah, the price of Bitcoin to the S&P 500, you will see that we've started to begin our fall. I think this top that the S&P is experiencing is incredibly similar to the top that the S&P faced or global markets faced going into the 2000 dot-com bubble. Julian Battel from Real Vision really put it beautifully in August of 2025. I was a fan of that analysis and I was trying to share it as much as I could in my personal TA2. Let's go ahead and try and find it together. I think it's a very, very relevant chart to be looking at. This was a while back. It was a long, long, long time ago, and he got it perfectly. Look, March 1996 to 2001 overlaid onto the S&P 500. Obviously, since this was August of 2025, just take a mental image and look at that chart now. It played out beautifully. So I think this is, start of a tumble. We've been predicting a crash on the S&P. We've also predicted a crash on gold. Gold below $4,500 per ounce. Literally 2 days ago, when we were sitting at 4,900, we highlighted the MACD bearish crossover. We highlighted the huge bearish divergence on the RSI. And I gave a warning to all gold and silver holders. Silver is down another 6% on the day. A huge double top that we also discussed. And I think that silver can reach to the $50 in the short term. Silver is something that is needed commonly in many different industries. So unlike gold, it's going to be suppressed and brought back to an equilibrium. The price of oil is surging. Bitcoin is sitting at $70,000. Oil is pumping because geopolitical tensions are, I think, unfortunately getting a bit more severe. We're seeing the IEA issuing a warning stating that the Iran war is the greatest threat to global energy in history. Why? Because of the Strait of Hormuz. People are saying the Strait of Hormuz is closed. It's not closed, but it's basically closed. There's a lot of restrictions, and that disruption in oil flow, the damage that has been incurred to oil fields, is creating a big supply chain problem that's not expected to be fixed overnight. It can take up to half a year for that flow to be fully restored. That means higher crude oil prices for longer. That means inflation increased dramatically. Crude oil is in so many things that you use on a daily basis. We don't even realize. Crude oil derivatives are in the clothes that you wear, the food that you eat, kerosene powers jets, and then, obviously the gas, which has already gone up significantly. Energy is a significant contributor to inflation. And inflation is projected to reach now close to the 5% levels. We're looking at Bloomberg Terminal, and we can see that the US 12-month inflation expectations have surged to 5.2%. And in this environment, President Trump is still saying that Powell is stubborn, that he's incompetent and not smart. I think that's so unfair. It's so, so, so unfair. Okay, I get that maybe you wanted Powell to cut rates before geopolitical conflicts, went up, which I think, anyways, doesn't matter what I think from a geopolitical sense. But, it's just, I think it's very unfair. That's the bottom line. The US Pentagon has asked the White House to approve more than $200 billion of a request to Congress to fund the war in Iran. Where is this money going to come from? It's going to be printed out of thin air, guys. And that's going to add to the national debt. That's going to cause even more inflation. And in this environment, I think it's totally unfeasible for the Fed to be cutting rates. The US is sending 3 warships to the Middle East and up to 2,500 Marines. I'm not a fan of how things look. Let's all pray for the best and these things to resolve as quickly as possible. Currently, there's a 40% chance that the Fed does a rate hike by October. Guys, we were sitting in a percentage probability that the Fed would be cutting rates 4 times this year. We went from a 4-time rate cut in 2026 to a rate hike by 40% chance by October. This is ridiculous. This is absolutely ridiculous. We're not expecting rate cuts until the 27th of October, 2027. That means no liquidity or very little liquidity until 2027. That means no altcoin season, guys. That means that we're going to get a rough time for risk on assets. Bitcoin is in this bear flag. I'm not a fan of how it looks like. Can we still see 84K? Look, it's possible, but ultimately, even if we get to it, which I wouldn't count on that, I see Bitcoin going lower until the end of the midterm year. I think if this bear flag support is broken, then we're going into the mid 50s. It's as simple as no need to overcomplicate things. Um, Even Trueflation, the independent data aggregator that has been calling for the Fed to cut rates also, because they've been saying the inflation is below 1% and there's risks to deflation, even they have admitted that in March alone, goods inflation rose from under 1% to 3.45% year over year, driven entirely by rising gasoline prices that we're estimating will stay up here for longer, which if you want to get exposure to them, you can go over to our partner BTCC down in the second link in the description below to get exposure to Brent crude oil, to WTI, and other traditional financial markets. This is ridiculous. Absolutely ridiculous. I'm not a fan of what's happening. I would be way more on the precautionary end. I think Bitcoin has some more way to go. We've been, bringing up Bang Cowen's charts so many times. Huge shout out to Bang Cowen. We've been bringing up the midterm year comparison alongside the QT ending bear market. I think the focus should now be more on the midterm year comparison with 2026. Over on into the crypto verse, I look at Bitcoin. I look at the average of the midterm year. I hide everything and look, I mean, it's just a completely on par correlation. And I think with the current fundamentals, it's very much expectable to see Bitcoin heading lower until the end of this year. Guys and girls, stay safe. Have a great rest of your weekend. Eid Mubarak to everybody celebrating. And I'll see you all on the next video tomorrow. Take care and bye bye.